Adam Back is with us now, Blockstream co-founder and CEO. Adam, thanks so much for being here. Appreciate it.
Thanks for having me on.
So this year has been an interesting one, to be sure, for Bitcoin and for cryptocurrency more broadly. But perhaps it's a bit surprising that we close out the year not with big gains, considering we hit new milestones of institutional adoption and new sort of regulatory and legislative support also. So how are you thinking about it as we close out the year, given that kind of support?
Yeah, I mean, I think Bitcoin is typically short-term volatile, and no difference here. I think the market is a little different now. There are more institutional buyers who are, slow and steady buyers. So there is this cycle where Bitcoin, goes through bull market and bear market phases. So I think there's a bit of speculation that could be the case, but there were some structural issues that caused the sell-off. Some exchange issues and macro news and high leverage, basically. So we're already about 15% off the lowest it got to a few weeks back. And, JP Morgan, for example, is calling for $170,000 in the next 6 to 12 months. Tom Lee from Stratfor is calling for $200,000, similar time frame. And there's a lot of institutional buying, which I think is it's very early stages so far.
I mean, some of those folks were calling for those kinds of price targets for the end of this year, and we haven't quite gotten there. But I mean, broadly, would you agree with those kinds of numbers that you see in here?
Well, I think it's very difficult to predict timing, but I think people have short memories too, right? Recall the last cycle, we had a 69,000 top around this time, about 40% through the cycle. And people thought that was the top, but it put in a higher top much later in the cycle, right? So I think the timing within the cycle is getting over focus. So if people zoom out and consider that the timing is less accurate, and there are different buyers now. The ETF buyers are quite sticky. They're sort of long-term investors. The Swiss National Bank buy MicroStrategy. Some of the Abu Dhabi sovereign wealth funds buying Bitcoin, some of the pension funds buying Bitcoin, and a number of banks, and investment companies like Fidelity calling a 1 to 5% allocation, Bank of America 2 to 4, and BlackRock 1 to 3. Were the first ones putting out a model price target, a model portfolio allocation. So I think those are, they're very interesting. They build comfort and support within the investor community. But those things take time to take effect, right? Because the banks have to go through trainings programs, get their salespeople the information. So I think that continues to come through in the next few years.
Adam, as somebody who was around, at the inception of Bitcoin, is this how you thought it would play out? I mean, I know that earlier in its sort of development, there was more talk about it being used for transactions, and it sort of evolved to be more of a store of value. Did you think it would play out that way?
Well, it's pretty interesting to see it develop over the years, and I guess a broad analogy would be the internet. So the internet originally was kind of counterculture. There were, very, very small percentage of the population on the internet. Then it became mass market. Then all major companies had internet, their web pages, internet services, smartphone apps. It just continues, right? And so I think ultimately the, investors are going to want to invest in the adoption of Bitcoin by users. So it's a kind of secondary effect. And I think the other thing to bear in mind is that while there are large amounts of retail payments in Bitcoin, primarily in the emerging markets, where they're less, there's more underbank situation, that it delivers a lot more to price formation if 1,000 users invest $10,000 to $100,000, than if 1 million users flow rapid transactions through. There's much higher velocity, and the merchants tend to convert to dollars or euros on the way out. So I think for the time being, the investment case is driving, the digital gold and unseizable global money is driving the price formation.
And when we look at the different ways that people have cooked up to invest in Bitcoin, I mean, I know that you're involved with a Bitcoin Treasury company, but I think of strategies sort of most notably in terms of the amount that it holds. Is that really the most effective way for people to get access? Or, you know, for most people, if they're going to invest in crypto, does it make more sense for them to invest directly?
Definitely nothing wrong with investing directly. And you think about the Bitcoin Treasury companies as a kind of Bitcoin derivative. You know, so there are sort of 1.5 and 2 times long Bitcoin ETFs. It has a different risk profile to that. And I think, you know, the answer for the Treasury companies, some people say, oh, they're accumulating a lot of Bitcoin. I think the answer there is buy more yourself. You know, effectively, it's taken a while for other companies, other public market companies, to follow Michael Saylor in the Treasury play, but there's been a lot of activity this year, and some big established companies, you know, like Tesla and so on, also have sizable Bitcoin positions. So I think ultimately all companies become Bitcoin Treasury companies to some degree because it's an inflation hedge in the sort of longer time frame.
Well, that partially answers my next question, Adam, which is, how do you see the evolution of the cryptocurrency ecosystem if you look 5 years from now, 10 years from now?
Yeah, I mean, I think, you know, having experienced the previous 5 and 10 years, things have moved much, you know, in the short term, people don't see the speed of development. But if you go back 5 years, it's, you know, it's pretty surprising where we are. If you go back 10 years, you wouldn't have expected at that time all of the major banks to be vying to provide Bitcoin-related products and services, making model portfolio recommendations, sovereign wealth funds, buying Bitcoin, pension funds, all of these things. And there's been a lot of regulatory improvement over this past year as well in terms of the types of banks that are now able to be custodians. So I think that opens the gate for people. Mm-hmm. And coming back to the MicroStrategy question, I think there are sort of mandate questions where some types of managed funds can only invest in shares, so they can't invest in Bitcoin the asset or Bitcoin ETFs just because of their mandate, right? So, and there are also tax arbitrage advantages for treasury companies. So, you know, in Japan, that's particularly the case for Metaplanet. Some countries were buying MicroStrategy shares because they weren't able to hold Bitcoin ETFs in a tax advantage retirement account, for example, so they buy MicroStrategy. I think things to bear in mind with treasury companies got more volatility, but they are working for you. They're increasing the Bitcoin per share over time. So if you can establish a good entry point, you can hold that for long term, and it can obviously, you know, the hope there is it outperforms an ETF.
Adam, we have to leave it there. Thank you so much. Appreciate it. That's it for Market Catalysts.